David, good to see you. Shall we start with the story of NVidia, your reaction to the quarter?
I don't know what you can say, John. I'm not sure any company could have lived up to the hype on this company coming into the report. It's really a testament to just how good this company is. Just 12 weeks ago, I think the 12-month target, the consensus was somewhere around 730. Coming into yesterday, it was over 1,000, and now that's getting bumped up to about 1,400. The emotions were so high. They ranged from the stock was going to Pluto to if they miss, it was going to be the end of life as we know it. So it was a pretty powerful report. I don't know what I could say other than that.
And what does it say about the AI cycle that we're in right now? I mean, yes, there's lots of hype, but there's also a lot of money on the line here, and NVIDIA is getting its fair share.
It trickles down almost to every company. This is not just a technology story. This is almost a humanity. It's the Industrial Revolution. It's a new one. This is certainly the biggest theme in my career, and I lived through the rollout of the internet. And if you think of some of the other industries that it's going to help, obviously some of the beneficiaries are companies like Dell, the data centers. The growth there was 409%. But even just air conditioning companies that are providing the air conditioning for the data centers, the utility companies, on and on and on and on. It speaks to how the productivity in a capitalist economy is going to expand over the next several years.
And so what does this story mean for the broader stock market then as well? Because, here we are, we're going to likely be talking about yet another record for American stocks today. I mentioned that yesterday investors seemed a little bit jittery at the idea that once again, we're going to have to wait and see what happens with inflation before there's a shift towards cutting interest rates in the United States. Where are we in this market rally, and how does a story like NVIDIA fit into it?
NVIDIA is certainly a driver of it, and, large cap secular growth, in particular large cap tech, really delivered this quarter, and the bulk of earnings. Look, do we have challenges? You bet. The inflation story is not over. Rates aren't going down soon. And if rates do start to go up, for whatever reason, it won't matter. That will pull capital out of the markets because other players at the edge, the marginal buyer, the insurance companies, the pension plans, they will look to fund future liabilities with something other than stocks. So stocks have their challenges, and the market isn't cheap. But one thing we're learning from all this is that valuation on its own is not a very good timing mechanism.
Because of the earnings power, because of for what reason?
Part of it is the hype, and it's the insatiable appetite for investors to be part of a revolution and the growth that they're seeing here, and they're willing to pay up for it. They could park their money in a 5% treasury. That's very comfortable, but you're not going to get the 200% revenue growth in a company like NVIDIA, parking in a T-bill. So people buy into that. The challenges persist. We have those, the geopolitical challenges we have around the world. All of that scales in and creates this matrix of the decision-making process that we have to make as investors. So we have choices. And Goldman put out a pretty decent note on this. It's not Tina anymore. It's Tara. There are alternatives, but this is one of them.
And so, as a strategist right now, how much of your time is going into just sticking primarily with the U.S. equity market? Do you think there's more room to run here?
I'm invested internationally as well. As a matter of fact, if you look at some of the international markets on a currency-adjusted basis, in other words, if you're in an ETF that is making up for the fact of the money that you're losing in the currency translation, you're doing pretty well. You look at places like Japan; they're rocking. But if you're not doing it on a currency-adjusted basis, half your gains are gone. So there are things you have to do to protect yourself.
We did see a little bit of weakness yesterday in the Canadian market as some of the material stocks and energy stocks that have been rocking and rolling recently started to pull back. I do wonder, when you think about the different sectors and the road ahead from here, how do you feel about the cyclical names compared to, let's say, the technology stocks?
The sell-off in copper yesterday, that was pretty extraordinary. That was a big gap down, and usually it bodes that there'll probably be some more of that coming forth. I'm invested in uranium. That took a hit yesterday as well. Some of the uranium players were down. But those are strong secular growth drivers for some time. It's going to be part of the story. It's not the only story. And unfortunately, a lot of it depends on China. I don't trust the numbers in China, and a lot of investors don't trust the numbers in China. So when they say that they're going to do a 5% economy, I'm not sure that's true. It doesn't make sense that they're going to have a 5% economy when their real estate sector is imploding like it is.
And then finally, what we'll watch China, certainly, on the subject of catalysts. Now that we're largely through earnings season, what else are you going to watch for? This is that period of the year where sometimes people would argue, selling in May is the way to go. That hasn't been the way to go so far this year. But now that we've moved through earnings season, what are you going to be watching? What are the catalysts for the market, do you think?
The sell in May thing, that's one of those market axioms that works right up until the time I use it. I can't run my money that way. Maybe one of the bigger risks that is upcoming, the election. And it's not a political dynamic. I don't even want to go there. But one thing for certain, it is the most divisive election in quite some time. And we're unlikely to have a winner on election night. And markets aren't going to like that. It could be days, perhaps weeks before they really finish all the counting on this. And I lived through that in 2000, and it was a market hiccup for sure.